Welcome to Trading Lounge and the US Indices for Monday, August 22, and it's 8 o'clock in Sydney, so the futures have just opened for the S&P, so that's handy, makes life a little bit easier. So, okay, so we're looking at a few things. First of all, we've been looking at the low here as wave 1, 2, 3, 4, and 5 here for an A wave, and then back for a B wave, and then going up for a C wave up here for a larger B wave, and then coming down again. So we've got wave 4 down for B, up for C, and then going down here to finish off the larger correction for an A, B, and C here. So that's going on in the background. There's also the possibility that we can have a bullish move that can just continue to move higher through here. So that would give us wave 1 here, back for wave 2 here, and then continue up as wave 3 over there. So that's it's possible. It's a bit of a long shot, but it's there. One of the things that we've noticed, especially on Apple, if I can just set the Apple chart up for a moment and bring in the volume. This is the Apple chart here. So all I wanted to point out here was that the move up through here is moving up on lower volume. So divergence and corrections are on lower volume. So it's likely that this move up here is corrective if we're using volume to confirm price action. So that's on on Apple, and that would probably be the same on a lot of other markets as well. So in that case, it still plays out quite nicely as wave A and B here and a C, or wave 1 can have lower volume. It's not the end of the world, but it just sort of, you know, doesn't tick a strong box in that in that regard, you know. The other count that we're looking up here is looking at this as an ABC pattern to this point too. So I've got that on the tick chart. We've talked about that. So we need to keep a bit of an eye on this. So this would be looking at all of the move down here as wave A, and then an ABC here for the B wave, and down for the C wave over here. That's possible. So we'll keep an eye on that as well. So we would need to see a nice clean wave. So far we've got 3 waves down. So we would need to see 5 waves down here. But even if we saw 5 waves down here, it still wouldn't mean that it would confirm this pattern with a move further down here, because also when I think about it, you know, if we do look at this, just shooting the breeze here, if we look at this as 1 and 2 here, and that's the correction for 2, it's rather big and complicated. So that means that wave 4 here can be simple, but we could still have 5 waves here, 3 waves back up, and 5 waves coming back down to the wave 4 of 1 lesser degree, as a wave 4 should, and then push up from there. So there's a you know, we have to work our way through a few different scenarios, and it's good to have them all on the table. So our first one really is the ABC here, but I just find it's a little bit small, but we'll still run with it for the time being. Yeah, so anyway, we've got this as an A and a B and a C wave up there. I'm just going to remove that, and we'll talk about this larger ABC pattern here as well in due course. But yeah, so it's possible that this could come all the way down here, and if that was the case, then the first 5 waves down that we're looking at, so we've got 1, 2, and 3 down at the moment, which we're calling an ABC, but if we call it as 5 waves down, we still need 4 and 5 to come into play though. Then we'd have an ABC, then we can short it again. But even if we shorted it, it could just be that C wave that I talked about, you know what I mean, coming down to here and then going up from that point. So we'd need to be careful about that, but it doesn't stop us shorting that. We can still short it, you know, and get something out of it, it's, you know. But if it was a 3rd wave coming down after that, at least we'd be on the right side, and would be able to know that from the speed of which it moves down as well. So coming back to the daily chart for a moment, let me just move something out of the way that's part of the video. recording thing. So basically we're looking for wave 4 to come back down here. That's what we've been sort of talking about. Now, because wave 2 was big and complicated, normally you'd see wave 2 simple and sharp and wave 4 sideways and complicated. But because this one is bigger, then this one can be smaller. This one's complicated and this one can be simple, the guideline of alternation. But still, this is the wave 4 of 1 lesser degree, so you'd kind of expect it to come down to that point, close to it. That's the 38.2%, and the wave 4 of 1 lesser degree. So we've got to keep that in mind a little bit. I just thought having the wave 4 here is just a little bit small for that. But anyway, let's just see how we go. We'll just count away. Let's go in a bit further. So I just think I'll focus on this wave 4 rather than the bigger bullish count, and I'm not sure where I've got that. I know I got it on the 100 ticks. I just wanted to have a look at what was on. Just wanted to have a look. It was on a few other ticks. Okay, so we were talking about the 5K tick before. So I don't know if I think I've probably rearranged this top here a little bit with the indices. So yeah, because I was looking at the SPY here for this. So the SPY had 1, 2, 3, 4, 5. We talked about that. And then we had a B wave here and a B wave here. So I'm going to take the B wave out of the way here and take this one out of the way. So that leaves us with quite a nice 1, 2, 3, 4, 5 here. A little bit dodgy in here, but it does leave us with a nice ABC here. Well, not a very nice wave C either, but it's probably the best fit. But the futures market, because it's trading 24 hours a day basically, has got a slightly different pattern within this space here. So what we're looking at here, we're trying to capture that third wave down here. That's what we were sort of looking at this point. So that will drop down a little bit further. We could put wave 4 here. It looks like we've got 1 and 2 and the third wave in here. So I mean, yeah, let me just look at that one. There could be 1 and 2 in here. I've still got that. I wonder if that's part of that. That's kind of starts at that point. So anyway, we'll work this out with the main one. But yeah, that's that. And I just want to have a look at because we'll have a look at the triple Q probably in the IWM as well. So yeah, this pattern here, I'm thinking that it's the A, the B here, and then 1 and 2 here, and then a third wave down here and a fourth wave. And I put the stop here before the futures opened. You probably gotten out on the Friday, you probably, grabbed the paper bag and off you went, but some folks still may be in it. Now the thing here is that this will be this number here, the 4-2 here, is going to be important. So we can expect a bounce off that. We can expect the futures to come back and cover the gap as well in due course. So if we were looking at this in terms of a third wave to the downside, well, then we would need to take this top here and bring that down to the 200. And then we've got the 38.2% retracement level there. So let's just assume for a moment that I'll just count it like this. We'll just keep a count on both of them, and this would be wave 3 here for this 1, 2, 3. It may not be the case, but it's just something that we should keep an eye on. I think I've got it done on a couple of other charts somewhere, but we'll get to those, I guess. So the thing about this one, if we got 5 waves down, then we could look at, I'm just looking for the bigger short picture here, if that was going to be the case, and a C wave here. I should put these in green, but what I wanted to say here is that this is the 38.2% retracement level and the wave 4 of 1 lesser degree. So we'll just put that there, and just remove that, copy that, configure that. So that's the 38.2%, so we'll know that for tomorrow. So I guess if we were going to go long, that would be a place that would need to be a little bit careful about, you know. So I don't think we need to get involved in this. You could buy it. You could probably buy it at the 4.2 off the low here. We'll have a bit of a look at that in a moment. But it's possible for this to come down to here to finish off, and then have some sort of ABC correction back to this point here, and then have a wave 5 down. Now the wave 5 down here would be roughly the same length as this one here. And then we would have, so that can come about there, and then we would need to look at just drawing this out. So this will be group 2 here, so I'll just take it from the 80 at this point, and that would leave us back up here for this. And we could short that box basically. If we get 5 waves down here, like if we get 5 waves, if we get 1, 2, 3, 4 and 5, if we get that, then we can short in this box here. So we'll turn that green, and this may not happen, we're just getting prepared for it, and we'll probably drop it down to the 40% in that space. We could also look to short it on the B wave here as well, depending on, sometimes the B wave's useful, sometimes it's not, and then we would have another move down. Now this move down, as I mentioned, can be wave C, but if it came down hard, then we'd have to look at it as being a third wave down, and we'll look at a bigger bearish picture at that point. So the angle of this, the behavior of that move, will help us dictate what we can view it as. But at the same time, we'll be building in, because of these 5 waves here, we'll be building in short over here for that, okay? Much the same we did over here, but we'll be getting the top here in this case because we've got those 5 waves to work off. Now this may or may not be the case, and at the same time, we also need to look about going, you know, if we've got this correct as well as an A and a B and 1, 2, 3, 4, 5 here, well then we need to be talking about being long and being bullish in this area through here. So we need to take that on board as well. So yeah, there's a few things that we can do in all of this. This is 5,000 ticks, so I think there was nothing on the 1,000 was there, so I think I'll just go to 100 and see what we've got here. Thought I had something on here for this. Okay, so we talked about shorting it here, and let's get a bit more in. Okay. Yeah, so we've changed this configuration here for this. So we're putting wave B over here for that. I'm just going to remove these here. And we don't need these guys. And in fact, what we can do here is, I've already done this and I've got it on a 10 tick chart. So we're looking down at 5 waves for the A wave, the B wave, and then down for 1. And then see, because of the futures market, we've got this is a little bit more complicated here rather than the SPY, where the SPY just had basically 1 camel hump here, right? Like an Australian camel. But this one here is like an Arabian camel. It's got the 2 humps here, so to speak. So, but we still need to call it 1 and 2 here. And I was counting this here, so I was okay with this. And the 5th wave here didn't really sort of play out very nicely here with this. It didn't really give me, I couldn't really count a nice 5 wave move down through here. So I'm still a little bit perplexed to what to do with this, and maybe I need to put this over here and we'll count 5 waves down here. But I can pretty much assure you that we're going to get a bounce off this, off the 42 here. How far it goes back up, that's something that we need to sort of figure out. Oh, we got 1, 2, 3, 4 and 5 here, and then we move up from that point. So one of the things that we can do if we like think about being long is you could probably get a very small position on the right on the forward 2 there, because there will be buyers there, you know how it works. But then I think the idea really would be to look for little classic trading levels patterns in maybe not on 1 if you bought here, and not here because then you're starting to overweight it a bit, but up here on the 2 and definitely the 3 here, we'd be looking for patterns to trade off of, you know. So, but I'll leave that up to you. Just small positions there, and you need the classic trading levels pattern like this, the arrival. You need that first high to go long on above that, and then these ones over here for that. So building through here. Now that may not get us too far as well, because it might just get us back to that wave 4 that we talked about over here, you know. So you need to be very careful. You don't want to be trading against this trend when we haven't got it secured at this particular point, you know. Yeah, so we could still have this as, I'll use this here as 1 and 2. You know, this could also be the 3rd wave down here too, basically thinking about the other one, the wave 4 over here, and then down for wave 5. So we'll just move this out of the way. It can still be there, because we still we want to get the wave 4 down further, and we're not seeing any we're seeing Monday open weak. It might firm up, you know. There's another reason for a bounce, that previous low over here. So we just need to monitor the bounce. We'll check it out tomorrow. I mean, if the market had opened stronger, well, then we can look at it. I would have looked at it, you know, being long, we could have gone long. But as I said on Friday, if Friday closes lower, then Monday's likely to follow through on that. So now we've got to let this finish off here for this. So okay, so the NASDAQ is much the same as well. So with the NASDAQ from the top here, we can look at it as wave 3 or wave C as a top. As wave 3 here, we're looking for an A wave. And then I've got a B wave over here. I've got this counted a bit differently, actually, this one. So yeah, I've got the A wave here, then an A and a B and a C wave for the B wave, and then a C wave up here, then down for 1 and 2. I suppose it doesn't make a lot of difference at the end of the day, because yeah, but anyway, wave A, wave B, and going down for waves C of 4 here, looking at 1 and 2, and 1 and 2, 3, 4, 5 here, wave 4 here, and looking down. You know, I was also looking at this as a possible low here, but it was a bit short and it hadn't finished off very nicely. It looks like 1 here with an A, B, C for 2. So we could probably label it like that with a fair bit of confidence in terms of 1 here and 2 here. And then this would make a nice 3rd wave down here. And then we'll have a 4th wave, and then we'll have a 5th wave down here, and this is where we'll get the bounce off the 13.1. It might slip down a bit further in all of this, but we basically need to find this. And yeah, so the thing is that there's no evidence of a move to the upside yet, so we just really need to wait for that. What we really want to see from a low is some sort of impulse wave like this here, and we don't really need to chase it either, because it's only going to come back and bite us here on the ABC correction, and that's where we'll pick it up. So if we can count at somewhere off the 13,000, off the 13.1 example, we'll look for that 5 waves, and then we'll buy the 50-60% pullback in this area here, you know. And then we can also look to start building on the long side at that point. Once again, we also need to be careful about this being, as we looked at the SP500, as a C wave at the top here for a larger B wave, and 1 and 2 and 3 and 4 and 5 coming down here. So that will need to be adjusted now as well. But this wave 4 here would pull back to this wave 4 over here. So when this moves up here, all we need to do is we just need to see if we're going to get this in 5 waves or 3 waves. 5 waves will tell us we're bullish. 3 waves from the low, wherever that comes in, 3 waves back up here to the 38.2% or the wave 4 of 1 lesser degree is going to tell us that wherever that may sit, we'll see where that sits, will tell us that we're corrective. So we just really need to wait it out. So we can expect Monday to be sourcing that low in that space. And over to the Russell. So we've got the A wave here, the B wave here, and I've got 1 here. And see, when I look at, just remove that, just want to have a look at the, see, this has also got the sort of 2 humps in here, which makes it a little bit tricky. But here you can see that we've got, it's much simpler on the stock side of it, where we've got wave 1 here, wave B here, and then down for 1, A, B, C for 2, and then moving down for 3, and this will be wave 4 here, and then coming down for wave 5. So another low to come into place here. So I could probably put this wave 4 over on this top here, because this doesn't really count down nicely as 5 waves here. I put the stop here this morning before the futures opened, just to make it nice and tight. So you don't need to do anything, I say, of course, but if you have held short here, then the 1930 of the 30, you can expect a bounce off that. That may even be the low at that point. Maybe I've got it wrong and we come down further to the 1900. So what I was sort of suggesting is a trailing stop would be, a trading stop is a little bit better than taking money off the table once you're, because you're in the trend, you know what I mean? And yeah, so a trading stop will make you more money. You know, it's different unless you're coming up to a big number like this, you know, then I suggest you take it at the number. But when the flow is there, you need to be on that side of it. So just continue with a trading stop at the last high, so to speak. But yeah, that's the Russell, and the DJ is much the same as well. So yeah, I think I've got this a bit better here. But the A wave, the B wave, and the C wave coming down here with 1 and 2 and 3 and A, B, C for 4 here, and then we've got 1, 2, 3, 4, 5. So I can now drag that down here now that I can see that that's there a bit better. So this will be wave 1 here and 2, and there'll be 3, 4, 5 coming. So you'll get a strong bounce off the 33,500. And it's pretty obvious because there's a whole, it's the balance point for this whole consolidation over here. So you may want to, I didn't talk about a short trade here, but if you were short here, then this is the number to take it at 33 there for that. Can we call that wave 1 and 2 and 3 here? Yeah, I suppose so. The reason for that, the wave C here has got really good form. So, you know, wave A had a nice 1, 2, 3, 4, 5. That was all kind of fitting. It's got the right look and feel about it. But this structure here is much sort of bigger, isn't it? There's more bulk to it. There's more form in the corrections and so on here. So could it be a wave 3? Yes, it could be, but I would expect the wave 3 to have moved down much faster, especially in this third wave here, and it hasn't. So it's kind of got the sort of the look of a wave C about it. So I think that we're on the right track here with this. So anyway, let's allow this to finish off, and let's see what comes after that, and we'll pick up the golden thread. The point is that if you've made money in these markets on the short side, be happy with that, and don't lose it in the turn and do silly things in the next moves until we've got something. I mean, if you know something, by all means do it, but I'll need to gather evidence before we can mosey along again in all of these. So yeah, alrighty, I'll leave it at that. Thanks for tuning in. Cheers.